The broadcast is now starting. All attendees are in listen-only mode.
Okay, let me shut this down here. Okay, I'm going to start about 10 minutes early, and the reason for that is I have to go over the disclaimers before I get started. So I figured if I, flip the switch and get started earlier, we could spend, the entire hour, talking about the markets, looking at what's going on, and maybe pointing out some opportunities as they kind of unfold here. So that's the reason why I opened the room early. So a handful of people that are already in here. Again, they look like, mostly, I think all of you are CFRN members. So good chance you guys have been here before. So if you didn't want to listen to the disclaimer part again, that's up to you. But this is something I have to go through before every session. So again, today it's Thursday, CFRN Thursday, November 8th. And what I do is for about an hour here, I'm going to go over the CFRN Trade Set Up in slow motion. All right. So what I'm going to do is the things that Michael is doing in the training room in the morning, I'm going to go over them in a slowed down version. Okay. So for those guys that are brand new going into the training room, this is going to be a great syllabus for you to use. Okay. Because I'm going to go over the setup. You'll hear some of the buzzwords. I'm also going to take it a step further and go over some observations that I've made over the years and some traps that other people have fallen into and point those out. So as you progress, all right, at the end of the trial, when you get an email from CFRN that says, hey, sign up now, at least you have an eyes wide open approach before you make that decision. All right, that's my goal. In the end, after taking the trial, you might say, hey, you know what, this isn't for me. So be it. But at least you'll get a chance to see what's going on, hear what's going on. You'll get a chance to download the platform. The platform is DT Pro. That's what you see here. And you'll get a chance to download the indicators. You have those for 5 days. So you'll get an email from me. It will lay out how to get the free trial, how to download the indicators, all that jazz. In the end, if you're brand new and you're just still scratching your head on how to get everything going, just call me at the desk and we'll do it one-on-one with a GoToWebinar where we kind of do a screen share, and with one phone call I should get you up and running. So it's pretty easy. So if you're serious about it, this is your first step. Watch this video, but then the second step is to download the platform and the indicators. Okay. The rest of you that are already CFRN members, this is a good opportunity for you to ask questions, whatever it might be. Again, this is an opportunity for you to get some more screen time, get to know the personnel of the markets that we're trading. Again, like I told the newbies, I'm going to point out some of the observations and stuff and traps that people kind of fall into. Okay. The idea really in the end is to train your eyes, go through a process as things kind of fire along here. Now, along the way, my phone is going to buzz like it is now, so I'm going to hit mute, put you guys on hold, and then pop back in here. So 1 sec. All right. So again, if you're returning, that's great. That means you're trying to learn. Maybe there's a problem you're having. Um, Maybe you're trying to step up your learning curve and get on your way here. The idea really is, to answer all those questions. And if you're having problems, let's talk about it. And, you know, you know, the, there's a mutual benefit here, obviously. If you do well, I'm going to do well, right? So I go out of my way to, spend an hour to go over some of this stuff. So you have the opportunity in a relaxed atmosphere to say, hey, you know what about this? And what about that? And, can you answer this? So it's kind of the objective in the next hour, okay? If something fires, well, I'm gonna jump right into the DOM. All right. I'm gonna shut down the live so I don't confuse anything. And just so you know, for transparency purposes, I'm gonna be in the demo. Okay. Um, but I am gonna go inside the DOM and I'm gonna, put trades on and off, and I'm gonna show you how to manage them, and we'll go from there. Okay. So that's a scoop. All right. So the first order of business is the disclaimer. And again, I don't like just to throw them up and just tell you, hey, to read them and then put them back under the blanket. The idea is to take a few minutes to tell you what this is all about, because we are dealing with leverage here, and it could be a double-edged sword, right? The disclaimer really basically says you can lose everything and some in your trading account if, in a nutshell, if you are not using stops, if you don't have a trading plan, if you're not watching over the markets, if you're not in front of your trading platform, if you're not engaged in what's going on, this disclaimer could pretty much hit you right in the face. All right. I've been doing this for, I don't know, roughly 25 years, and I really have seen the good and the bad and the ugly when it comes to this business. Okay. So the disclaimer is out there, and it's usually for those guys that are brand new in our space, because they're just kind of scratching their surface. They probably got an email, someone saying, hey, I got this great idea, why don't you check this out? And so you really don't know what the risks are involved because you're brand new. Okay. So that's why the disclaimer really is out there for you. Okay. It's meant to scare the new guys. My experience over the years is with the CFRN members is guys have already been through this room, this guru, this room, this guru, and they've been worn up, beat up, that kind of thing. So when they get to CFRN, this thing has probably slapped them around a few times. Okay. So that's been my experience. Okay. So that's why, I could throw them up there and say, hey, take a look at, throw it back down. But, if you're brand new, you really should know this. Okay. The other thing is, too, is that you could be doing all the right things. Okay. You could be using a stop loss. You can be engaged in the market. You can have a trading plan. You can have all those things. But you know what? If something goofy happens in the world and, something happens, at least you're in front of a DOM, or if you're in front of a platform, if all fails, you can just hit exit at market and cancel if all fails. Okay. With CFRN, you have a set of rules, right? We're going to go over those rules this afternoon. Okay. You have aggressive risk management. That keeps you engaged in the market. All right. These are the rules we're gonna go over. You have to be in front of a platform. Okay. You're going to be maneuvering a lot of things on the DOM or this tower here. Okay. So you're going to be engaged. So like I said, if something goofy comes along, hey, you can hit exit at market and cancel. Get the heck out of Dodge. Okay. So that's the long-winded explanation of the disclaimer. Okay. You can lose everything and some in your trading account. Okay. This is a leveraged market, and everything should be risk capital when you get involved in it. Okay. All right. The other thing that always pops up is my relationship with CFRN. Okay. A lot of times people, kind of put me in that same basket with them. I don't work for CFRN. The relationship started probably 5, 6, 7 years ago. At that point in time, it was just the radio program. It was CFRN. And at one point, Dwayne and I hooked up somehow, some way, and he said, hey, come on the radio program, talk about markets, experiences. We have many people out there have questions, and I could be a good sounding board, someone they can ask. So it started that way. Well, along the way, people kept, asking Dwayne, show us how to trade, show us how to trade, show us what you're doing, show us what you're doing. Well, I guess he got with Michael, and their background is they're trade station developers, and it's kind of perfect timing, actually, because what happened in the end is I said, look, I have a trading platform that's absolutely free, and it reads easy language, so you can code all your indicators inside the platform. And here's the result. Okay, DT Pro, this is the platform that we use and support. It's the same one that Michael and Dwayne use, and these are the indicators inside the platform. Okay, like I said, the platform's free. The only thing that you're paying for is data. The data is only $15 a month. That's cheap. And then if you do open up a trading account and maintain the bare bones minimum, which is $2,000, the demo is free. So it was an inexpensive way for people to get their feet wet, get them exposed to the market, get them exposed to CFRN. It allows them to practice without having to spend any dough. Okay, so it was kind of a perfect fit. Over the years, I've kind of adopted a lot of the things that Mike and Dwayne use on larger time frames, and when Michael's out, I could teach the class. So that's kind of an added bonus. So if you have questions along the way, you guys can ask, and I can answer them, and I feel confident and comfortable that I'm giving you the right answers. So that's kind of how it started. So CFRN, they are the educator. They have the keys to their car. That's the CFRN indicator set. So if there's anything, if you decide to go down the CFRN path and you ultimately say, hey, sign me up, all those relationships are going to be between you and them. Okay, the dialogue, the money that you pay and all that stuff, that's between you and them. Anything on their website, like the workshops, the videos, the members area, the one-on-one mentoring, all that other stuff, you'll be engaged with them one-on-one. When it comes to the platform, okay, just hit me with all the questions. Okay, you can call or email. That's the cool thing about that. And like I said, in one phone call, we can do a screen share and get you up and running. Okay, so that again is the long-winded explanation on that disclaimer. Okay, basically there's a line in between us. Okay, there's no commingling of funds. They don't share in commissions. That's always a big question that pops up. They can't. They've never asked. So that's a good thing. But there is a line between the two of us, and we got to make that clear before we talk about any of this. So that's the scoop. Any questions about that? Because if not, I'm going to get down to the nitty-gritty and kickstart this thing here. So let me minimize this. Okay, I'm going to go back to this page here. This is a page that's been around from day one. Okay, as you can tell, this is the NASDAQ back in 2012. So I go back to this one because it's the clearest thing that Michael had as far as a picture, and it kind of just sums it all up. So nothing's changed. Nothing's been form fitted over the years. The setup has been around from day one. So it works. So that's why I use this screenshot. Over the years, other things have developed. Other members have come in, said, hey, if you do this or do that, do this, do that, this is the result. I know the white bar setup, 137, 164, all that other stuff have kind of been created along the way. This guy has been around from day one. Okay. The first order of business is the time frame. We are on a 4-tick range chart. Okay, 4-tick range chart. Oh, I was afraid that was going to happen. All right, so stand by, hold that thought. We're on a 4-tick range chart. Let me do that while I put you guys on hold. All right, I'm back. Back to the 4-tick range chart. Okay, that's the time frame we're on. Okay, now you might be on an hourly, you might be on a daily, you're probably on a time-based chart. Okay, if you have DT Pro, what you want to do next to the time frame is hit this drop-down box and go down to custom. Select range bar and make that one look like a 4. Okay, then hit OK. This is the S&P 500 on a 4-tick range chart. Okay, here's a common mistake people make. They do the right thing, they come down to custom, they select the tick bar, and they make that 2 like a 4, and it looks something goofy like this. This is wrong. Okay, if you're staring at this, you fell in trap number 1. You hit the tick, you didn't hit the range bar. That's one of the common mistakes. Okay, so on a 4-tick range chart. And the reason is that the height of each candle is 4 ticks in height. Okay, so when you're in the training room, you're going to hear Michael call out highs and lows, right? He does that because he knows the height of each candle is going to be 4 ticks in height, right? He knows that ahead of time. So if he knows the high is going to be, 28.08 and a half, he knows the low is going to be 28.07 and a half. Okay, so when you hear him calling out the different highs and lows, then he's being proactive, because what he's doing is he's going to be entering the market on either a buy stop, which is above the market, or is going to be entering the market on a sell stop, which is below the market. So if the market has so much momentum and just kind of blasts off, he's going to be stopped into the market. Okay, he's going to be stopped into the momentum. And conversely, if the market falls apart, he's got that sell stop there underneath it, and the market will catch him on the way down. Okay, let me tell Paul to call back. Hey, Paul, call me back, okay, bud? Call back. Sorry, guys, that was Paul. So that's what he's doing when he's calling out the highs and the lows. He's buying it on a stop and he's selling it on a stop on momentum. Okay, so that's the scoop. So the magic equation to that whole thing is this. If you wanted to keep it simple, is just add or subtract 5 from the high or low, and that's the magic number. That's the number that you will right click in, all right, if you're going to buy it on a stop. Okay, so for example, okay, just to do this, here's a perfect example, right? Here, the low was 28.07 and a quarter, right? So the high had to be 20.08 and a quarter. So he would have right-clicked at 28.08 and a half. It's plus 5 ticks, okay? Plus 5 ticks or subtract 5 ticks. That's the number you click on to enter into the market, okay? So if that pops up while we're talking, while we're looking at the markets, great, okay? That's what we'll do. All right, so we're always on a 4-tick range chart. All right, let's get back to the basics here. And again, this is going to be for the guys that are brand new. Okay, this is your syllabus going into day 1. So we're going to talk about the top portion of the chart, which is the price action. Okay, so some buzzwords. The blue and red line is referred to as the MA1. Okay, nothing fancy about it, it's just the MA1. The green line is called the BBC. That's short for bullish bearish cross. all right, together make up step number 1. Okay, together makes up the first part, or the bullish or bearish cross. Okay, so when the MA1, that red and blue line, crosses the BBC, that green line, that is the cross. That is step number 1, the bullish or bearish cross. Okay, now from this point forward, I want you to be thinking of color. All right, so here's the scoop. If the MA1 is red and crossing the BBC, that's a bearish cross. We're associating red with selling. Okay, if the MA1 is blue and crossing the BBC, we're looking for buying opportunities. That's a bullish cross. All right, so the one that's highlighted here, all right, I'm not smooth on this. The one that's highlighted here is a bearish cross. Why? The MA1 is red. Okay, so keep that thought. Red MA1 crossing the BBC. All right. Step number 2. All right. Here's what we expect to happen. After this cross, the normal thing for the market to do is to gravitate, flag, or move toward that BBC, as it does here on the chart. You're looking for the market to go up and touch that BBC like it does. Okay, you're not going to take action on that until it closes in the direction of the trend. Okay, highlighted by this arrow. Okay, we define the trend as being down. Why? Because the MA1 is red. So what do you think we're looking for? We're looking for a red candle. So you're starting to see the little pieces of the puzzle kind of match. You're looking for a common denominator. The ideal situation, or the highest probability, is when everything is the same color. Okay? Does it happen often? No. Okay? But that is the highest probability setup. Okay? So after the cross, identified by step number 1, we're looking for the market to come back to the BBC and close in the direction of the trend. Okay, that is step number 2. Okay, the match has been lit. So now our eyes are gravitating toward the oscillator portion of the chart, which is referred to as the slingshot. Okay, and the trade really exists down here. Okay, so here we go. Buzzwords. The red and blue line is referred to as the cycle. The green line, well, it's just the green line, nothing fancy about it. Okay, but here's the deal. Okay, remember I told you, common denominator. We're looking for everything to be the same color, right? So we have a bearish cross. The MA1 is red. We have a down close. We have a red candle. We are looking now for a red cycle, and ideally with a nice slope to it like this one, because what this is saying, the trend is down in this time frame on a 4-tick range. Okay, and this little run up to the BBC in failure might be the extra little variable that says, you know what, this little rally, this green line pulling away or separating itself from the cycle, okay, it's just an air pocket in this ongoing downtrend. Okay, that's what it's referring to. The space between the green line and the cycle with this yellow arrow here is referred to as divergence. Okay, this is the divergence, or now called the separation, that Michael is referring to in the trade room. Okay, the divergence or separation. The green line pulling away from the cycle, as you see here. The cycle is telling us lower prices, lower prices, lower prices. And this price action up here is consistent with this green line, is saying, you know what, sell it. Sell it on the close of this candle, because what we expect to happen in the end is the green line is going to pull away. Price action is going to pull away. And then the green line is ultimately going to come down and close the gap. And doing so, price is going to follow along. Okay? And it's at this point where the green line meets the cycle is the point where you get out of the trade. Okay? That is all the normal things that are supposed to happen with this. Okay? Now I said the trade exists down in the cycle. Why is that? Because what we expect to happen is this green line to pull away, pull away, pull away. Okay? Keep doing one of these until the trend changes. Now we have a blue cycle, right? And now the green line is creating bullish divergence. The green line is underneath. Okay? And in a perfect world, we're selling this, we're selling this, we're selling this, and then when everything turns up, we're buying this and buying this. And along the way, every time we push the button, we're using an 8-tick stop behind it. So I'm brand new. What does that mean to me if I'm dead wrong? If you're trading crude or the gold, you're risking $80 a contract if you're dead wrong. If you're trading the soybeans or the S&P, it's closer to $100. If you're trading the YM, which is the mini Dow, that's closer to $40. Okay, if you're dead wrong. Okay. In the end, if you're signing up for CFRN, you're not learning to pick the top, you're not learning to pick the bottom, and you're not learning to trade it from point A to Z. You are learning to take a piece out of the middle. Okay? And like I said, you're going to have an 8-tick stop behind it. And along the way, as the market moves, as the market moves, as the market moves, you're going to be inside a DOM. Okay? What is a DOM if I'm brand new? That's this guy here. This tower here is where we're doing all our buying and selling. Okay? If we click in the green, we make money if the market goes up. If we click in the red, we make money if the market goes down. Everything will be executed on this DOM. Okay? So going back to what I was saying, in the end, you're going to be using an 8-tick stop and aggressive risk management along the way. Okay? That's the deal. So that's what you're signing up for. You're signing up for scalping, aggressive risk management, risking $80 to $100 every time you push the button. You have to be in front of the screens. You have to be engaged in the market. You have to know the rules. You need to practice the rules. You need to practice the tower, the DOM here, the depth of market. So there's a learning curve that goes into it. Okay? You being here today tells me that you're serious. Those that are CFRN members that are here, okay? You're serious. You're taking it. You've got additional screen time. You're asking questions. You're learning. You're taking this like this is a business. Okay? So that's the cool thing about it. So that's the deal. Okay? This setup we're going to look for in the marketplace right now. Okay? So that's the game plan. I'm going to get a little water here and then get down to business here. So I'm going to go, let's go left to right here. Well, here, I'm going to start with crude. All right, first thing that we need to identify is the market trending. That's the first thing. Before we hit push any buttons, do anything, looking for the step number one, which is the bullish or bearish cross. Are we trending? Okay. Observation number one, CFRN members, get in the habit of hitting the zoom out button. Okay. You can see a big picture like this. The market could be trending, but if you take a few minutes just to zoom out, okay, you might find that we're not necessarily trending. We might be just trading sideways. That could keep you out of some bad trades. All right, just taking a moment to zoom out. I'm not asking you to go to a 30-minute chart or an hourly chart. Just zoom out. Just look left a little bit. And when in doubt, if you're unsure, don't hit any buttons. Make sure it hits you right in the face. It says, this market's trending. Okay? All right. So observation number one, make sure we're trending and zoom out. Okay? All right. So right now, we had the bearish cross here. Okay? The MA1 is red, cross the BBC. The normal thing for the market to do is to pull back to the green line, which is the BBC, and close in the direction of the trend. Okay? It didn't quite get there, right? And there's some rules to take into consideration when that doesn't happen. All right? But at least for the moment, all right, I would say the crude is trending. There's a little bit of support here. Okay, I have dynamic support here. I have support here. We might be chopping here a little bit. So for the moment, I would want to see the market drop a little bit further before I get excited about shorting the crude. Okay. Natural gas. Okay, zoom out. Are we trending? We got some higher highs. Okay, that's something to get excited about. Okay. We expect the market ultimately to do what? Pull back to the BBC and close in the direction of the trend. Okay, it does that here. All right. Hold on here. Does that look like we're trending down? Natural gas, no. Because if I zoom out, we're trending up. We have higher highs. We were consolidating here. Right here. See all the green dynamic support side by side and resistance? That's the first indication. If you're not sure, if these are side by side, we are not trending. Even over here, when we poked our head above, okay, we were actually marginally trending. We were going up, but as you can tell, maybe not so much. This acceleration here is really the first time I'd say, you know what? Okay, that we started trending. Side by side, what I'm referring to is this. Your dynamic support and resistance look like choo-choo tracks. They're right down the middle. You can almost draw a box around it. If you can do that, we're sideways. Okay. So right now the natural gas is a little sloppy, so we're gonna step away from that. Okay. Gonna go back to crude. Side by side would be here. Dynamic support here. Dynamic support here. We might firm up here a little bit, so we have to be a little bit careful. Okay, in crude to the downside. But everything is set up for the crude to go lower. Okay, and the reason is, for the moment, the cycle is red, right? And the green line is pulling away. So we do have divergence. Okay, that's separation. So you have that going for you. Okay. All right. I thought I shut that down. All right. Let's move on to the indices. My gut feeling is we're going to be trading sideways here. All right. So the S&P E-mini right now is a hot mess. It's just back and forth here. So we're going to let that cool off. Okay. The Dow, the same thing. Again, marked side by side. Green support dots side by side. Red support dots. Okay. Not so much side by side, but you can see the visual here. Okay. Now we're starting to make lower lows. So now I would get excited about the Dow. All right. I'm going to zoom out. We have lower lows. So we can eliminate that. So we're going to get ready to try to short the Dow. Good luck with this volatility, but we're going to try it. Okay. Green support dots printing. That's okay. I want you to take note. I drew the trend line. Okay. All right, now, the only trades that we're going to take, okay, that's back above the trend line. So we would have to adjust it, okay? So it's looking like this, which isn't a very good slope, okay? And now the cycle has turned color on us and starting to turn up here. So let me make a few comments here because a lot just happened in a small period of time here. All right, number one, after you get the cross, let me take a step back. As soon as you identify the market is trending, you're looking for step number one. Okay, step number one is that bearish cross. That's the MA1 cross in the BBC. Okay, this thing is falling apart on me. Okay, number two, you expected the market to pull back to the BBC. That's the normal thing, right? And you're looking for that down close, this red candle. That's the perfect world, perfect scenario, right? In the process, what I want you to do is get in the habit of drawing a trend line. You have to do that, okay? How do you do it? With DT Pro, just left click on this little icon here on the left, okay? And that'll gauge your trend line, okay? So here's how I would do it in real time. That is the trend line I would draw right now, off the wicks if you see wicks, okay? Now the reason why we draw the trend line, okay, because we never know if the market is going to do the normal thing, okay? Originally, we drew this trend line like this because we didn't know if it'll get up here, okay? We adjusted the trend line. Ultimately, it did the normal thing and it fell apart, okay? The reason why you draw that is because if it falls and breaks below that trend line without even getting to the BBC, what it's telling you is it's got some bearish momentum right now, okay? And so if it does that, you're in a position to really go inside the DOM and take action, okay? A lot of the trades that you see Michael do will be this kind of formation, okay? Where it can't even get to the BBC because that's the normal thing and just falls apart, or it just takes off. All right, so get in the habit of drawing the trend line, okay? It takes two candles to draw a trend line, okay? So here, gauge the trend line right here, right after that cross, and draw it. If you have a body like you see here, it's on the corner of a body. If you have a wick, it's at the bottom of the wick, and draw, okay? Now, we just had the normal thing happen, pull back to the BBC with a down close. Observation number two. Ideally, we want everything to be the same color, right? If it's not, it's blue and pitching a 45-degree angle like we see here, that's going to be a disqualifier. Okay, so I want you to keep that in mind. Yes, it's falling apart, okay? But that is a disqualifier. Now I'm going to jump into the ES because this thing is slowing down. Maybe we can do something there. Okay, here's a perfect example. I wish I was over here. Market always takes either two green candles or two red candles. Here's a perfect example of it. Okay, dynamic support printing. We draw a trend line. We close below the trend line. This activates the short. Okay, the trend line is drawn for two reasons. Number one, we don't know if it'll get back to the BBC. Number two, if it turns color on us, the cycle, as it does here, that's another reason why you're drawing the trend line, okay? So it takes two candles. So if you're in a downtrend, you're looking for two green candles. If you're in an uptrend, so I don't know if we have an uptrend today, but you would look for two red candles, all right? All right, so let's see if this S&P can pull back here. So right now, notice how I'm zooming out. Got a little support here, okay? Maybe we get a bounce. Ideally, that's something maybe we could take action on if it kicks back here. All right, so for the moment, we're looking for a bearish opportunity in the S&P. That means we want to go short. We want to left click in the red because we'll make money if the price goes down, okay? engage your trend line. Okay, your trend line should be engaged. Okay, we get another green candle. We're going to draw a trend line off the two bottoms. So let's see what happens here. Okay, finally got some action here. All right, so we got a red candle. What do we do? Okay, right now I wouldn't do anything. Could I draw a trend line? Yes, you could. Michael would draw the trend line like this. The bottom of the wick, the corner of the body. What I'm looking for is two green candles. I want the market to be flagging or gravitating toward that BBC. Okay? Yes, they'll be right next to each other, and then you'll have to make some adjustments, Mark. The adjustments, you'll need a little bit of time in front of the screen to learn how to do that. Okay? A quick adjustment would be like this. Market's moving, of course. It might start off this way, but because we were below it and then closed back above it, an adjustment would be like this. That would be an adjustment. Takes two candles. 1, 2. We broke the trend line. We closed back above it. We make the adjustment. It would take a close below this line to activate a short. Okay, right here. That would activate a short. Okay. All right, so we're looking for the easy and on. We're looking for the market to actually come back toward this BBC. All right. Now, when a market's popping like this, moving quickly, what I would suggest doing is going to an 8-tick range chart. Okay, go to an 8-tick range chart to slow things down. The only difference, the rules are the same, other than your stop loss is not 8 ticks. Now it's 16 ticks. Okay, 16 ticks. All right, so if you want to slow it down, go to 8-tick range chart. Same thing. Mark, draw the trend line like this. Doesn't matter if it's a 4-tick range or an 8-tick range. Two green candles, okay? That's how you draw the trend line. Same rules apply. You draw the trend line because we don't know if it'll get back to the BBC. Well, it did. You know what? It might even close in the direction of the trend. It does. It also closed below the trend line. Okay? But here, the cycle is blue, and at a 45-degree angle, that would disqualify this trade. Okay, we want everything to be the same color. So the point in all that, number one, you want to slow things down, go to an 8-tick range chart. Number two, all the same rules apply. The only difference is you're risking 16 ticks instead of 8 ticks per trade. Okay? All right, let's see if we... All right. I zoomed out. Okay, let's see if we get a little pullback again. Okay. It's always 2 bar lengths. So if you're on a 4-tick range, did I say 18? I'm sorry, 16. I'm sorry if I said 18. Should be 16 ticks. All right, so let's see if it pulls back to the BBC again. All right. We have a little bit of a double bottom. Okay. Come on, guys. Let's do something so we can get a little dirty inside the DOM here. I'm going to just take a look at crude real quick. I'm sorry for shifting gears on you. Okay, and notice the first thing I do is zoom out. I'm concerned about support here, okay? So I'm not going to touch it. I'm hoping it bounces. Come on, bounce. Okay. This was the normal thing for the market to do, pull back to the BBC, but the cycle was the wrong color. Okay. All right, let's find something else. I want to get involved here. Okay. Gold. 4-tick range, trading sideways or not. Are we trending? No. Okay. Dynamic support and resistance side by side. That word I used again, Mark, side by side. Also, if you look left, again, get in the habit of zooming out, got a little bit of support. Okay. So we're kind of chopping around here. You know, if gold starts closing above this trend line here, this sideways action, okay, then I would probably consider this long that might be developing. I'm not sure about latency, Bob. I'm not sure. Depends on your internet. So the gold's on. We're sitting on parade rest here for the. All right, I switched again on you. We're back to the S&P. Okay, nothing going on. The Dow. Okay. Again, you'll see this potential bullish setup, right? Okay. This is a potential bullish setup, right? If you look at it under a microscope, look at what the market's doing. It has all the variables, right? Zoom out. Are we trending? No, we're sideways. This is why this is probably giving you some grief, okay? So what you're seeing is something under a microscope like this and say, you know what? I need to get long here, right? But again, zoom out. We're consolidating here, so you have to be careful of that, okay? So again, I got to hammer that down because that's one of the big traps people fall into. All right, so hold on. Okay, the S&P consolidated here. Not surprising with the bullish cycle here, the way it is. It's saying be careful. All right, let's try maybe a currency. Euro currency. Are we trading? Are we trending? We're sideways there. Swiss franc. Zoom out. We're trending. Swiss franc, we're trending. So, I like the lower lows. I like the fact that the cycle is red. We have the cross. So maybe there's a Swiss franc is in a position, is in a bearish position. We wouldn't want to look to go short the Swiss franc. Okay. The pound, no. Japanese yen. We have the bullish cross, right? Right here. Let's not get caught in the trap. Are we trending? We have a higher high here, okay? But we got a lot of resistance perked up around here, so I would table that. Okay. Draw a trend line off the lows, close below the trend line. This is a momentum trade. Why is it a momentum trade? Because it's below the MA1. However, we have green support dots, and we do not execute momentum trades into dynamic support. Momentum trade off the table. Okay, I'm going to try this again. Dow Jones, 8-tick range. Zoom out. Okay, we have some lower lows because we were consolidating here. See if we can possibly get short. Yeah, I'm not sure, Bob. I am sitting right next to the Merc. See if I can't. Boy, I'm trying to do this so we can do something together. I have to wait for the S&P to pull back. Okay. Okay, I went to crude on you. Okay, we have a lower low on crude. Got a little bit of support here. We have to consider that. So be careful with that. But we'd be looking to try to short the crude if we get a little bit of rally here. Okay. I know Dwayne was looking for 60.5, right? So maybe this is our opportunity. So here we go. Well, hold on. Let me let it. One sec. Waiting for another green candle. Okay, we're looking for something like this, another green candle. Let me get it here. Yes. The Swiss franc did look good. All right, so this is how I would draw this. Okay. Dynamic support building underneath us. Okay. Okay, it's doing the normal thing. It's trying to get back to the BBC. Observation here. The cycle is red, but it's flat. The cycle is red, which is ideal, but is flat. Okay. Get faced with that. Crude is off the table now. I'm giving us a ton of reasons why not to do it. The Swiss franc, if we can rally a little bit, then I would be interested in that. All right, hold on. That's my trend line in the S&P. Okay. This is blue, so the trend line is required. We are trending. Okay. Again, this is the wrong color and pitching the wrong way. That creates a problem, right? We did get the close. Okay. But this, again, this is going to disqualify the trade. Okay. We do not want to go short into dynamic support. No, we do not. If it's traditional slingshot setup where it goes back to the BBC, yes. If it's something right here where this here mark, it's a momentum trade. It closes below the MA1 and we have dynamic support underneath it. No, that is not good. No, we do not take that one. Okay. The Dow is sideways. Holy smokes, the NASDAQ. I changed the NASDAQ to an 8-tick range chart just to give us a little bit more real estate. Okay, we're trading sideways here a little bit. All right, I changed up on you guys again. So 1 second, I'm trying to find something we can sink our teeth in. This hit all the variables. Okay, this was not good. Okay, we needed a red cycle. I would have taken a flat blue cycle like this down here. But when it's up like this, that's not good. Okay, and here's another observation to make. Look at when this bearish cross happened, way the heck back here. Okay. Your best opportunities after the cross will be at the first, second, or maybe the third time. Okay. Once you get this far along, what happens is the cycle will start turning blue on you, and you start getting these cycle resets that Michael will talk about. Okay. This is where, you'll run into a problem, because the market normally doesn't go straight up or straight down. There is some kind of correction, right? Well, the cycle is going to be an indication of that, turning a different color and pitching at a 45-degree angle against you. Okay, that'll be a clue that, oh, something's wrong. That's why you want to stay out of those trades. Okay. So again, after the cross, you can go to the well probably the first, second, or third time, but after that, then you're asking for trouble. Okay, there was that attempt to the BBC and failure. Okay, there's the flat cycle. The flat cycle is at the midpoint. It has no slope to it. Okay, market is consolidating here. That's a reflection of this flat cycle. Okay, correct. What I mean is the first, second, or third attempt at the BBC, because sometimes we don't get back to the BBC, right? So yeah, the attempt to the BBC. Good question, Mark. Thanks for clarifying that, because I was keeping that a little vague. Okay. This is a good reason why the market's doing what it's doing. I flipped around here, right? That's what's normal, okay? I know back here, we had this blue cycle pitching up and the market turned over. Okay, this is normal. See if this gives us something to buy. Let's try that. It's just moving so fast. Let me go to the gold. Maybe gold is doing something. No, gold is still stuck in the range. You guys can see that, right? This one kind of hit you right in the face, sideways. Okay, that one's an easy one to identify. Okay, and we got dynamic support and resistance using that scientific phrase I use, side by side. Okay, technical term. It's sideways. Okay. All right. I labor over that every Thursday because that's where people mess up. All right, now hold on. We're going to do this regardless. Got to do something here. That's how I drew the trend line. Okay. All right. So I wanted to do something in front of you so we can manage a trade together if it works out. All right. So we had the bullish cross back here. The market did the normal thing, was pull back to the BBC, and also had the up close. Notice I drew the trend lines off the tops, right? And we had the up close and close above it. Okay. We had to draw the trend line, okay, because we get in the habit of doing that because we never know if it'll get back here, right? Not only did we draw the trend line, we needed to draw it because this turned color on us. Okay. Now, that kind of stinks. That had to happen. Anyways, let me just keep it there. All right. So I entered right here on the market, and I put an 8/6 stop attached behind it, okay? The good thing about the DOM is if you click this little Tinker Toy triangle, right, the bottom of the DOM opens up, okay? And if you put that factor at 8, okay, that will automatically put the stop loss in, just like that, okay? Now, a few things, the reasons why I did that. It doesn't surprise me what happened, but here's the scoop. Okay, it had everything that you want to look for, right? So let's rewind the tape here. Okay, we have the bullish cross. The MA1 is blue, crossing the BBC. Market starts flagging, coming back to the BBC, that green line, right? So we engage the trend line, because that's what we're taught to do, and we draw the trend line, okay? We draw the trend line in the process because we never know if it's going to get back to the BBC, okay? Eventually it did, right? Not only that, the cycle below started turning color on us. So that's watering down the probability right away, right? We had an up close above the trend line. This candle here lit the match. So what I did is I went inside the DOM and I left clicked, okay? I left click because we want left click in the green because we make money if the market goes up in that direction, and if we're going short, we're going to left click in the red, okay? Not only that, not only did I left click there, okay, we created a bracket order, hitting this little button here on top of the DOM, and we set the factor at 8, okay, because every trade has an 8 tick stop attached to it, okay? Now, we entered here, the market came here, right, and dinged this out. All right, now, the reason why I did that is because I wanted to, had a lot of the variables to it, right? Had the pullback, we were able to draw a trend line, it closed above it, I was able to get inside the DOM, show you how to, build a bracket, all that good stuff. All right, something I've been laboring over all afternoon, okay? You see this, zoom out, what do you see? A little bit of resistance here, right? So it's not surprising the market is printing dynamic resistance here after looking left here, okay? Because the market is reacting off of this prior support and resistance levels, okay? So the question is, yes, we are trending, okay? Zoom out, not really. Okay, we're butting our heads against resistance here to the left, okay? So I point that out again. The reason why I popped in the DOM is to show you a few good things there, okay? But the big lesson here is, were we really trending? And that was something we had to consider, okay? So remember that, okay? Now, if we start closing back above it, okay, and we have a bullish cross and potentially have a potential setup here. So let's see what happens. That's how I draw the trend line mark off the tops there. It's not always going to be perfect the first time around, okay? And you might have to do this, okay? We have the bullish divergence down below, okay? We're still not trending. We have some lefts here. We rejected these levels pretty hard, okay? But I want to get in the habit of drawing trend lines in front of you guys so you guys know how to draw them, okay? Corner of the body, top of the wick. Notice 2 red candles side by side, okay? Okay, if it doesn't, if it does another up close, the low is 2,800, then the high would be 2,801. Michael would right click at 2,801 and a quarter. Just like that. Why? He could be proactive because he knew the low would be 2,800. The high had to be 2,801 and a quarter to print a new candle, and that would be the close. Okay? The same process. 8 tick stop, 8 tick stop. Okay? As I said earlier, we're not trending. Okay? But again, I wanted to point that out because it gave me an opportunity to show you how he does that in the room. Now, the rule set is this. If it goes plus 4 ticks in your favor, you're going to move the stop to break even, okay? Or a close on the other side of the MA1, okay? All right, so notice how I dragged the stop up, okay? That was the other thing. Okay, we're out. Okay, so rewind what we just did again, okay? Dynamics resistance printing, right? We zoomed out. We're still trading sideways, okay? But we poked our head above resistance, okay? Market started gravitating toward the BBC. In the process, we draw the trend line. Corner of the body, top of the wick, just connect the dots, okay? We're expecting the market to pull back to the BBC and close in the direction of the trend. This green candle here lights that match, okay? It's required that we close above the trend line because the cycle is red, okay? Now, before I pushed any buttons, I said, we're not trending, okay? We have a little bit of resistance here, but we did it anyways because, again, it gave me a chance to show you a few things. Number one, when this closed above the trend line, I went inside the green, and what I did was, I did what something Michael does a lot. I was a little proactive and said, look, if we know the low is 2,800, then the high has to be 2,801. I would enter the market on a buy stop at 2,801 and a quarter. That's the low plus 5 ticks. The low plus 5 ticks. That's how I came up with that number. In the process, okay, the bracket is highlighted. So as soon as I get in, that 8 tick stop is set right behind it. I don't have to push any additional buttons. Okay? Risk management rules. Plus 4 ticks in our favor, or a close on the other side of the MA1. This candle here is a close on the other side of the MA1. We moved the stop to break even. Okay? How did I do that? I left click, dragged, and dropped it. Okay? I just dragged it up and released it. That's all you have to do from that point on. That's all Michael is doing. Okay? He's just dragging his stop up, dragging his stop up, dragging his stop up. Okay? All right. Close there. And then a few more ticks. I moved the stop plus 2 ticks. So the idea was got long here, got stopped out here. Okay? But in the end, as I was saying, the market is not trending. Look what's going on. Look at why we're just kind of trashing around here. It's not surprising because we had a little bit of resistance here. Paul, call back in about 15 minutes. Okay, bud? All right. All right, so I got a chance to show you how to use the DOM a little bit with the money management rules, but highlight a great point I keep hammering over and over again. Okay, you got to get in the business of zooming out. Okay, because here the market's laboring for a reason. Okay, I would say if we start closing above this line here, start trading above it, then we'll get excited about the long side. But you know what? If we start curling over here, we might get actually some bearish setups, like the Dow. Okay. So hold on. So now we have a bearish cross, right? Nope. Not enough space here. We have the down close. Okay, not a lot of divergence down here, but not a lot of separation here after the cross. Okay, so for the moment, no shorts right now. But we do have the bearish cross, so that's a good start. Okay. We have dynamic support supporting, building here too. All right, so hold on, let it drop here, and then maybe we'll get short. But this isn't a surprise. Remember, we thought this thing would have trouble because it had some resistance here. All right, now we have some support here, right? Let's get through that. The cycle is red. Let's see if it can build up. So engage your trend line. Okay, you should have a trend line ready to roll. Starting to build bearish divergence, right? Come on, uptick. So we can draw a trend line. I'm looking for another green candle. Okay. You could draw the trend line like this, but then you're looking at momentum trades, right? Let's try to stay out of the momentum trades. That's too fast. Just remove. All right, so hold on. Come on. Kick back a little bit. We're starting to trend here, so that's good. So hang in there. We're going to look to see if we can get short here on a pullback. Okay. Okay, another couple green candles here. So be patient here, okay? S&P's moving at least. I would try the Dow, guys, but it's just moving so fast. I would try it, but it's lightning fast. So I'm not going to be able to give you any value if I'm just hop, skipping, and jumping everywhere. I'm already doing that as it is, but trying to trade the Dow like that is, you got to slow it down. All right. Did we have the touch? I don't think we touched it. It was close. I might have blew that one. I don't know. When in doubt, stay out. I might have blew that one, but we'll see. Okay. I don't think we touched it, so that's what I'm going to. So I drew the trend line. Okay. We have bearish divergence. The green line is over there. Okay, so now we're doing the normal thing. Okay, now here's that adjustment I was talking about, Mark. Adjustment would be like this. Started here. Now it's like this. It's a different color, so now we're going to have to close underneath the MA1, okay, in order for us to get short. Now the other problem is, the other disqualifier is hitting us in the face, which is the black step line is now touching or piercing the BBC. Okay, the black step line. Ooh, that was too close. All right, so the S&P is off the table. All right, let's see if there's anything. Whoa. Okay. All right, well, the gold finally broke out of that consolidation. Okay, we were consolidating here for a while, and the gold just broke down. So now the gold is giving us some shorting opportunities. All right, so we want to look for shorts in the gold. All right, so we want this market to come up toward the green line here, the BBC, and we'll try to get short. Okay. Okay. Could you have done this? Yes, Mark, you could have. That is fair game. That would be a short. In the end, it's gonna result in a break even. Okay. But let's see if it pulls back to the BBC. So don't go anywhere. Let's see if we can get messy here. Now, again, make sure your DOM is set. Make sure the bracket is set. Buy stop is checked off. Sell stop is checked off. If you right click over that and hit factor in ticks, right click over it, factor in ticks, just make sure it's set on 8. As soon as we get in, the stop will be automatically placed. All right, hold on. I'm going to switch on you again. That's moving down. Maybe the crude is too. If we make a lower low, we'll do something in the crude too. All right, well, we're going to keep an eye on the gold and the indices here. All right, so that was that disqualifier, that black step line getting into the BBC, okay, the green line, and so the market's a little bit confused. All right, that's why you stay out of those trades, because then chop fest starts. So now we got bigger consolidation, right? See how I just zoomed out? It's going to be real tricky. Okay, let me go back to the gold. Oh my gosh, it's 2 o'clock. All right, so I need like a good 2 hours with you guys just to hang out while things are going on, maybe in the morning or something. I don't know. I'll have to work on that. It's hard, when things are moving and popping, because you want to do things and tell you guys some stuff at the same time. All right, so right now the crude would have to make a lower low here. Okay, we have a double bottom in place. So the crude would have to start trading below 60, 54, 55 before we would get short. Okay. Gold, we like the short side, but we want it to rally a little bit. Let me take one more look at the S&P. Okay. This is why we follow the rules. When that black step line broke the BBC, right? You would have thought short. I get it. I would have thought the same thing, or even right here. Okay. But notice what happens. We just kind of get into this chop fest. Okay. The biggest takeaway on Thursday is the trending action, just zooming out. It really comes down to that with a lot of you guys. If you're struggling a little bit, it's usually because of this. The screenshots that you send me, it's usually because of this. Okay? Zoom out. Okay? Other takeaway. Okay? Please get in the habit of drawing trend lines. Okay? If you're having a problem with it, just grind through it. Okay? Keep getting in the habit after the cross, engaging the trend line at least, and making attempts of drawing them. Okay? Okay? And there's reasons why we do that, because we don't know if it'll get back to the BBC. And if the thing just takes off on us, okay, we're in a position to do so. Here, draw the trend line. Do it. Okay? Execute it. Again, this looks like a bullish cross, right? If the low is 2,800, the high has to be 2801. You'd be long at, well, hold on. We would be long right here, 2801 and a quarter. Here, let's just do this. Sometimes that's easier. Mark it. Okay? Pull back to the BBC with the up close. We have bullish divergence. Okay? Again, we're not trending. Okay? We're not trending. Look at how I zoomed out. We're still in that chop. Okay? See what happens. I did that because it had, again, all the variables but trending. Okay? All right. So here's another thing you guys will be faced with. The same thing. Okay? Where the close, hold on. Notice how I'm moving the stop up. I'm just dragging it up. Drag it down. Drag it up. You left click over this number 1 and release it. Okay? All right. This here, this green candle, was the up close. That was the bullish cross right here. Pull back to the BBC with the up close, this green candle. Okay? We had bullish divergence, the cycle's blue, and the green line is underneath. Okay, so that's good. All right? So we have a lot of the good stuff there. We drew a trend line. That was good. Okay. Again, the warning, this disclaimer was we're not trending. Okay. But the reason why, again, I did that, I was able to go inside the DOM and show you what to do. Okay. Which is left click on the DOM, or even try to right click and buy it on a stop like Michael does. Okay. I wanted to show you how you drag the stop up with the DOM. Okay. And I actually wanted the market to kind of do what it's doing, which is kind of chop around here. Okay. Because this is what happens when you get caught up in chop. Okay. You get stopped out, a lot of break evens. Okay. You may even get stopped out a lot of times. Okay. It's for that reason. So that's it in a nutshell. Okay. It's 10 after 2. Okay. So I'm going to call it quits. All right. So I hope you got some value out of it. Look, the S&P is set sideways now. Okay. We're just stuck here for a little bit. So the market really needs to bust out of this range. Okay. Before we can get crazy about it. Okay. Good question. How far back do you look? Here's what I do. I'm not even asking you, Bob, to change time frames. I know, and Dwayne, good, he'll go to a 30-minute or go to the 5-minute, right? He likes to do that. That's fine. All you have to do, like this, you can get hypnotized by this a couple times, okay? But 1, 2, 3. Sometimes I just click the mouse 3 times. Honestly, that's my best answer for you. Okay. It'll hit you in the face. It really does. Okay. It'll like this. Okay. Like we were staring at this for a while, right? In the gold. It kind of hits you right in the face. I mean, it's sideways, right? Then all of a sudden it does this, and you zoom out 1, 2, 3. That's pretty good. You know, that should give you enough real estate to say, you know what? We've breached any support here and we're trending. Okay. So, I mean, you don't have to really dial it down. Okay. But honestly, I just do 3 clicks. Yeah. Perfect, Bob. So that would be my advice. You know, nothing scientific. Just maybe 3 clicks. Okay. Now the gold has gone back to the BBC, right? And we are trending. Okay. We broke out of this box, right? So that's good. Okay. We broke out of this box. So now, as far as the rules are concerned, we could look at shorts. All right. And it starts with a trend line, right? It starts with a trend line. So draw the darn trend line. Engage it. Just start drawing. Okay. Because this is blue, this waters it down, right? That's your process. Blue is not good if you're short. Okay. Blue at a 45-degree angle is off the table. Okay. Draw the trend line. We get a close on the other side of the trend line. You got a decision to make. All right. Short it. We know short it. But if this is, a different color, okay, it better be flat like this. That's okay. But if this starts curling up, my advice to you would be don't take it. Okay. Just don't take it. All right. In the room, you'll see Michael take some of them. Okay. He'll look at it more at a 45-degree angle. My outlook on it is ideally all the same color. I'll consider it if we're flat. I'll consider it if we're flat and we're breaking support or resistance dots. But honestly, if you just want to make sure there's no indecision, you can't rule out anything, just make sure it's all the same color, period. You will have less trades, but you'll have more certainty. What do you want? Okay? So it's a process. So if you're brand new, there's a few new guys in here. It's a process. It feels like it's fast. It's supposed to feel that way. That's why I do this to slow it down. Okay. What you're doing is you're training your eyes to go through the process. Okay. Are we trending? Yes. Do we have the bearish cross? Yes. Okay. Engage a trend line. Can I draw a trend line? Yes. Okay. Now my eyes gravitate toward the cycle or toward the slingshot. Is it blue? Yes. Okay. Is it at a 45-degree angle? No. A close on the other side, sell it. Okay, so I left click in the DOM. That's another process. So you're just training your eyes to do this. Okay, that's what you're doing. And in the end, you have to sign up for, hey, do I want to be a scalper? Because that's what we're doing. We're looking at a daily chart. This is a daily chart of gold, which, by the way, looks sideways, right? Under a microscope or 4-tick range chart. So all the news and all the stuff that's going on that happened an hour ago, we don't even care about. Okay, we're just looking at what's happening right here, right now. Okay, and along the way, you're going to be using a stop loss that's pretty tight, and you're going to have a lot of break evens. You're going to have some stops along the way. That's what you're signing up for. Okay, that's it. I promise that's all. All right, so next Thursday for another hour. All right. I honestly would like to trade the Dow and the NASDAQ, but man, that thing is just moving quick. All right. So, but I'll just try to point them out as best as I can just to kind of beat it in your heads. Okay. All the little things you need to be looking at. Okay. And then at some point, you're going to get comfortable enough where you start pushing your own buttons. Okay. Yes. Bob Z, it's on CFR. If you YouTube CFRN Thursday, they're all there. I'm also building another channel. It's called Capture the Move. Okay. What do I think of the Russell? I do not make money in the Russell, period. So what do I think about it? I hate it. For years, I watched Michael do it. I watch him make money doing it. Heck, I've been doing this for 20 years. If he can do it, I can do it. Nope, not me. The reason is it doesn't fit my personality. I don't know the personality of the Russell. So what happens is the little jumps, jerks, jukes, all that other stuff made me nervous, and I'd hit the button and get out. Not even follow the rules because I wasn't ready for it. If you tell me to trade the gold or the crude or those other things, I've seen that. I've seen that story. I've seen that book. I've seen that movie. I know the personality, so I'm comfortable with it. So in the end, you guys are going to do the same thing. You'll gravitate toward those markets that you're comfortable with. Euro is another one. I'm comfortable with that. And the euro right now, we had the bullish cross here. We had the pullback to the BBC. Not a lot of space. We had the divergence down below. Okay, but we're a little bit sideways here. Okay. A lot of times in this time frame between 1 and 2 o'clock, you'll see that happen, a lot of sideways action. Okay. That's why it's easier for me to go over some of this stuff, because you're not getting the stuff that you'll see in the morning that Michael's doing. Okay. So you'll hear a lot sideways, sideways, sideways. But I can, if one or two things kind of fire, then I can really dial it down and break it down for you. Okay. So time frames, the time frame that Michael's trading in, that's a good time frame. All right, that's it. Next Thursday for another hour. I'll see you guys in the training room in the morning. And if Michael steps away to go to the bathroom, I'll pop in and see what's shaking. Okay. All right. Thanks for hanging out.